Welcome back to the Brent Bruce Daily. Today is November the 1st, 2022. A little bit later, actually a lot later in the day. I was traveling today to go to an event here on the West Coast. It is now 6:01 p.m. Central Time, but I wanted to get this report out to you because tomorrow is such a big day, and you need to know where we are right now, what that means, and then what to expect or hope for when the Fed makes its announcements tomorrow. It's going to be helpful for you to be aware of and kind of what we want to hear from them. So let's take a look at where we are on the home loan interest rates right now. Overall, the market had a good day. We're up 6 basis points. The market is now closed. The bond market is closed at this point in the day. We're up 6 basis points for the day on the mortgage-backed security. And again, we are just, oh, that's the wrong chart. Let me jump over to the mortgage-backed security chart here. And you're going to see that we continue to battle with this 25-day moving average, just banging up against it, pushing back down, back and forth, going on really our fifth day. 1, 2, 3, 4. This is our fifth day. And whether we're going to go up or down from this point is really going to, I think, break out tomorrow. I think tomorrow is going to be the big day. Maybe the next day, maybe it'll end up being Thursday, but I really think that it's going to be tomorrow. So we want the mortgage-backed security to shoot up north. We want this to go up. That is good for home loan interest rates, but we got to break through this 25-day moving average. Now, take a look here at the technical indicators continuing to hold on to that 4.0 on the 10-year Treasury. So we go over to the 10-year Treasury. Now, this chart, we want to see below the 4.0 number, which is about right here. And we went below it at one point and then pushed back up. Now, this here is a 25-day moving average. The 4.0 number is a little bit higher. Up right there it is, right, that range there. So we kind of broke below it and then bounced back up it, and you can see that we are now closing over 4.0. So both the mortgage-backed security and the 10-year Treasury are sitting on their respective floors or ceilings, waiting for the news to come out from the Federal Reserve, which is going to be tomorrow. So where are we on the home loan interest rates right now? If we take a look at the Brent Bruce Daily, this is kind of interesting, something that is a little bit of a telltale of what we think is going to be happening tomorrow. So if we pull up the Brent Bruce Daily at this point, again, the market is closed. So these are the final rates for the day. We're at 6.875, which is an eighth of a percent lower than yesterday. We were at 6.99. Now, normally I would expect that we would close with the interest rate a little bit higher than the day before, ahead of a federal funds rate announcement, because traditionally they're just kind of hedging their bets. They're putting a little bit of fluff in there just in case the report that comes out or the comments that come out from the Federal Reserve are not what they wanted to hear, that are maybe inflationary or just not friendly to bonds, and that could be painful or hurt home loan interest rates. This time we see that they actually went down today, went down an eighth of a percent, which should make us believe that the overall mortgage banking world is feeling confident with what they're going to hear tomorrow from the Federal Reserve. What is it that we want to hear from the Federal Reserve? We want to hear, number one, that they're going to raise the federal funds rate by 0.75%. So make sure that you are aware that that does not mean that home loan interest rates are going to go up, and communicate this. This is a great time for you to make a post about the fact that the Federal Reserve does not, them increasing the federal funds rate does not mean that they just increased the home loan interest rates. As a matter of fact, I read an article yesterday that said exactly that they're controlling home loan interest rates. In some ways they do, but not directly. Okay, so make sure that you're aware of that. And also, we want to hear in their comments that they're feeling that inflation is subsiding, and that they may be able to be a little less aggressive on the next federal funds rate announcement, the next increase, that they might look at increasing it 0.5% instead of 0.75%, which would show that, again, if we see this kind of roller coaster of inflation going up and then coming down, it would show that they're feeling that we already reached this point and that we're now going to start to come down. If we're starting to come down in inflation, they can start to be a little bit less aggressive with their monetary policy, and they can let it kind of soak into the economy, and that we're going to see inflation subside, which will allow home loan interest rates to subside. Now, yesterday, I made a prediction about where home loan interest rates were going to go. I gave you a number and I gave you a time when it would happen. So I'm going to make you go back and watch yesterday's report if you did not. If you did watch that, or if you do know what I predicted, we're going to continue. We're going to talk about that prediction for the next few months until it actually occurs, because I think that it will. Let me know your thoughts Make sure that you like, subscribe, and share. And I will be getting back with you tomorrow, hopefully early, when I hear the announcement come out from the Federal Reserve, which is going to be, I believe it's 8:30 Eastern time. So we should know pretty early as to what the Federal Reserve is going to do. I will keep you posted. Have a great night.